Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, September 30th, 2010. It was a busy day of fundamentals, but with the end of the month, there are also cross currents of month-end flows. Taking a look at the euro-dollar pair, we see that the overriding theme, as it has been all week, continues to be dollar selling. The euro-dollar pair moved above its highs from yesterday, testing the levels above 1.3650, but with some positive data coming from the US, the Greenback did stall that euro-dollar rally at that point and managed to consolidate some of its losses. Looking back at the past 3 weeks of price action, we see that we have climbed almost 1,000 pips since testing our low near 1.2650, as investors have increasingly priced in more quantitative easing from the Fed. The euro was helped by the announcement by the Irish government of fresh capital injections into the country's troubled banks. The move will require more austerity from Irish taxpayers in order to fund the bailouts without turning to Europe for a bailout. The bond spreads between 10-year Irish and government bonds narrowed significantly, a sign of receding fears. We also saw a very positive report from Germany in that unemployment fell by a more than expected 40,000, the 15th straight month of declines, and the unemployment rate fell down to 7.5%, the lowest level since 1992. Car makers and other manufacturers boosted hiring in order to meet export-led demand. That positive report helped euro strength during the overnight trading session. Taking a look at the pound-dollar pair, we see some rather strong volatility, as well as we saw in some other pound crosses. The pound dollar first rallied on the back of comments from Adam Posen that further asset purchases are not a foregone conclusion. 2 days ago, he advocated an aggressive monetary policy, which had pressured the pound, as it meant that perhaps the Bank of England was closer to quantitative easing. The UK also saw some better than expected housing price data, which helped to lift it during the overnight trading session. However, after climbing to test 1.5920, we see that the pair slid more than 100 pips, likely caught up in the end of month flows, but also as we had some strength for the US dollar as a result of some positive US data. We again retested our support near 1.5715, our lows for this week. That also coincided with our 200-period moving average in the 1-hour time frame. Taking a look at the euro-pound pair, we also saw a big surge during the same time as we saw the pound declining against the dollar, as the euro moved up above the euro moved all the way up to 0.8670, breaking past its highs from yesterday's session. Again, end of the month flows may be the culprit here, but overall we extend the moves in this pair we have seen earlier in the week, which is that the euro continues to gain on the pound. Moving away from our European pairs, let's look at the US dollar Japanese yen. Here we see the dollar weakening overnight, the third day that it has done so, as we have seen markets push this pair down without any intervention by the Bank of Japan. The pair found some support at 83.15, and we saw a bit of a rebound in favor of the dollar. As I mentioned, we had the better than expected US data, so that may have helped the greenback to pair some of its overnight losses. Again, we are perilously close to the levels where Japanese authorities intervened in the markets in the middle of September, so we have to keep our eyes out for this important level. Let's take a look at that US positive data, which was led by the ISM Chicago Business Barometer. The headline reading climbed to 60.4 for September from 56.7 in August, which easily topped forecasts of a 56.0 reading. The overall index was buoyed by rises in new orders and production, though unemployment readings did soften a bit. This report, which used to be called the Chicago PMI, is a curtain opener for the monthly ISM Manufacturing Index and could mean that September was a better than expected month for the US economy. In a second better than expected release, jobless claims decreased by 16,000 to 453,000 for the week ended September 25th. The total number of people receiving unemployment insurance and those getting extended payments also fell. Still, employers aren't adding enough workers to reduce the high unemployment rate, but at least we see the 4-week moving average turning down again, following its increase during most of August. Finally, even the third release of third quarter US GDP provided a surprise result, climbing to show an annualized pace of 1.7% growth, a notch up from the second version. The upward revision was primarily due to a moderately higher estimate for inventories. In Canada, meanwhile, the monthly measure of GDP for July saw the economy contract 0.1%. In Canada, meanwhile, the monthly measure of GDP for July saw the economy contract 0.1%. That matched expectations, but the release may have actually helped the Canadian dollar, as yesterday, the Canadian Finance Minister had warned that the figure could be a bit negative. The decline during the month was led by a 0.7% decrease in manufacturing. Looking at the US dollar Canadian dollar pair, we see that the Canadian dollar gained following that Canadian release, as well as the better than expected US jobless claims figures. But once we hit support around 1.0230, we see the pair rallying again in favor of the greenback. While stocks in the US had opened much higher, we did see some of those early gains paired, and so that may have increased the value of the greenback in this pair. But overall, we continue to see it bouncing between resistance and support in very ranged trading, as we had seen over the past 3 weeks or so, with our resistance at around 1.0350 and support coming at around 10220. So again, traders continue to play the range in this pair, and we'll have to see a break of one of these important levels before we see a clear new direction in this pair. So that's it for today's market highlights and fundamental data. Let's take a look at the upcoming fundamental docket. Tonight, Australia posts a measure of manufacturing, as well as the TDMI inflation gauge. Japan, meanwhile, posts a measure of household spending, releases its national and Tokyo consumer price index, as well as the unemployment rate. Overnight, we see Germany posting its retail sales, Switzerland also posting retail sales and a measure of its economy, the CVME PMI. The UK posts its manufacturing PMI, and the Eurozone releases its unemployment rate. Tomorrow we have a good amount of reports headlined by personal spending and income data. That will be followed by the UMich consumer sentiment final version, as well as the ISM Manufacturing PMI. Now it is due to fall to 54.6 for September from August 56.3, so we'll see if the Chicago PMI, which was better than expected, could mean that we see the ISM Manufacturing PMI come in better than expected as well. Also tomorrow we get a look at construction spending, as well as total vehicle sales for the month of September. And that does it for today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.